I've helped my clients access over $50 million in business funding. And here is the secret. It has nothing to do with business credit. You can get over $100,000 in 0% interest funding using your personal credit, even if you're starting from absolute zero. I'm about to show you the exact blueprint that actually works. What is going on, my people? My name is Clarissa, and I currently run two businesses, a coaching program for credit and funding companies to learn how to fund their clients and scale their businesses with marketing systems, and by Label Funding Company, where funding companies use my funding team to fund their own clients. So it's safe to say I'm a credible source for you to learn how to fund yourself or your own client. And this video is specifically for those of you starting from zero on a brand new personal credit profile. When business owners first think of business funding, they think of lines of credit and loans that requires collateral, proof of income, and lengthy processes to get approved. And they're normally never approved of brand new businesses because they don't have all the qualifications that they need. But what they don't know is that they could leverage their personal credit to access up to $150,000 in 0% business credit cards, which don't require business age, collateral, tax returns, or any documents besides a good personal credit score. And here is the reality. Your personal credit score is the foundation for everything. Banks use your personal credit to determine your credit worthiness for your business funding. Without a strong personal credit foundations, you're fighting an uphill battle. So the problem is that once people learn this, they immediately start applying for credit cards everywhere. Chase, Capital One, Bank of America, and just throwing applications everywhere. But this will destroy your credit with multiple inquiries and most likely will get you denied or approved for very tiny limits. So I want to show you exactly what this blueprint looks like. And I'm going to share my screen and walk you through the personal credit business blueprint step by step on how you can build your personal credit in order to get approved for business funding. All right, so how do we actually build a personal credit profile so they can access $50,000 to $100,000 in business credit, even if we're starting with a very thin, brand new credit profile? This is the exact systems that I use with all my clients to go from zero personal credit to six figures in business funding. And this is not just some theory. These are processes that I have proven and used with my clients to access over $50 million in funding. All right, so before we even talk about business credit, what you need to understand is one very important concept, and that is that to unlock business funding, you will need your personal credit. So personal credit comes first because most lenders are not going to look at your business revenue or at your business history at the beginning. What they do care about at first is your personal credit profile, because that's the main trust signal that they're going to use to determine if you're responsible with your credit or not. So think about it like this. If a bank has never lent your money to your business before, the only thing that they can really evaluate is your payment history, your credit limits, your utilization, and your overall credit profile, which is exactly why having strong personal credit is the foundation for getting high limit business credit card approvals. So when your profile is structured correctly, lenders feel much more comfortable approving you for higher limits right from the start. And this is exactly why our goal in the beginning is to build a credit profile that positions you to qualify for $50,000 to $100,000 in unsecured business funding with no collateral, no investors involved, just leveraging the banking system the way it was supposed to be designed. So once you understand how lenders evaluate your profile, you can structure your credit the right way and unlock a massive amount of capital for your business. And that's exactly what we're going to break down today, step by step. But before we do that, let's talk about one of the biggest mistakes that people make when they're trying to get business funding. And that is applying randomly and way too early. So just because you have a 700 plus credit score, it doesn't mean that you're ready for funding, because there are other checkboxes that you need to check to be able to get approved for high limits. A lot of beginners, they learn about credit and they immediately start applying for multiple credit cards with no strategy. And I call this the shotgun approach. So just because they have a 700 plus credit score, they start doing a bunch of applications. But the problem with that is that the lenders will see those multiple applications and it will signals to them that you're desperate and that you're not going to be a good candidate. So what usually happens is either you get denied or you get approved for very little limits. So like those 300 or even just a few $1,000s, which those limits are basically useless if your goal is to access some serious amount of business funding. On top of that, every single application is going to create a hard inquiry, which can lower your credit score and stay on your report for up to 24 months, or that it takes you 30 to 60 days to remove through credit repair process. And which is why the key is not applying more, but applying when you're actually ready. This usually means starting with the secure credit cards and credit builder accounts to create a strong base, but not too many. Second, you would want to add strategic credit cards, and those are going to be your first unsecured personal credit cards that will help you start building your actual limits on the personal side. Third, we're going to increase those limits by requesting a credit line increase every 3 to 6 months. And then Fourth, you're going to be building comparable credit, meaning that you want to have your personal limits to start mirroring the type of credits that you would want on the business side. And then finally is maintaining those profiles so that you can keep your utilization low and start making on-time payments so that then you can be ready for funding. So this whole sequence is going to take probably around 5 to 6 months at minimum. But if you follow this structure, you're going to be positioning yourself or your client to qualify for much higher business funding approvals. So let's start with the actual foundation of the personal credit. And this is where everything begins. What you're going to need is 3 core components: payment history, credit utilization, and account mix. But here is where most people don't understand is that you can go and apply for regular credit cards if you're starting completely from scratch, because they're going to be approving you for very low limits. You need to first build the foundation strategically and start with credit builders. And these are accounts that can report to your credit, but don't require a hard increase that destroy your score when you're just getting started. So the step number 1 is start with credit builders, okay? These accounts are designed to help you build your credit without adding any risk to your profile. Most of these credit builders accounts only do a soft pull, meaning that you can open them without creating a hard inquiry or dropping your credit score. And the main goal here is to build a payment history, because on-time payments can make about 35% of your FICO score. So they're one of the most important components that makes your actual credit score. So by making constant monthly payments, you start creating the history that the lenders actually want to see. And once you have that, you're basically building the trust and foundations that the bank want before applying so that they can approve you for larger limits. Now, there are 2 types of credit builders that I recommend: secured installment loans and credit builder programs. The first one is to secure installment loans. So what you're going to basically do is take your own money, put into savings accounts with a lender you already have a relationship with, borrow against that money, and pay it back. This doesn't do any type of credit inquiry, and you're using money that you already have. And it shows as a real loan into your credit report. And here is a pro tip: if you have $1,000 or $2,000 in your savings account, let it sit as a secured loan instead of just doing it with a few hundred. Because when that shows on your credit report as an over $2,000 installment loan, it makes your credit profile look way more substantial. The second option is to use credit builder programs like rental reporting. Most people don't know this, but you can get your rent payments reported to your credit bureaus, and some programs even let you to backdate it up to 2 years of rental history. That instantly adds over 24 months of payment history to your report. Now, if you or your client has never paid rent before, then the only option is to do the first one with the secured loan strategy. You should be applying for 2 to 3 builders max, because those are going to be just a stepping stone. So you don't want to have too many of those, okay? So as I was saying, the sweet spot is around 2 to 3 accounts to be open in order to start building your foundation of your account. Once those credit builders have seasoned for a few months, so like 1 or 2 months, now you're ready for phase 2 of the blueprint, which is to start applying for personal credit card. So the biggest question that I normally get is, what lender should I be targeting? In 2026, there are 2 types of lenders that you want to first prioritize, right? It's going to, number 1 is lenders that you already have a banking relationship with, because if you already have a checking account with a bank for years, they're more likely to approve you for higher limits because you already have their foot in the door. Regional banks have way more flexible underwriting than big national lenders because they have a smaller applicant pools. So they're competing for you to be their customer, and they will give you larger approvals, and it's easier to build a relationship with them. Now, the things that you would want to avoid are accounts with the retail store credit cards and some private lenders. So you shouldn't be applying for BJ's, TJ Maxx, Targets, or Victoria's Secrets, because the quality of your accounts on your report actually matters. When you apply for business credit later, banks will view your credit line from a regional bank way differently than one from a department store. You only need about 2 to 3 credit cards max. More than that can actually hurt your average credit age, which ultimately damages your actual score. And here's where most people get stuck in the blueprint. You get approved for a personal credit card, probably $1,000 to $5,000, and you think you're done. But this is actually just the beginning. What you need to do next is building comparable credit. So when you're applying for business credit cards, lenders will look at your personal credit limits and use that to determine how much business credit they can give you. So if you only have a $2,000 limit on your personal side and you're asking for over $100,000 in business credit, that is going to be a red flag. So what you need to do is start building higher approvals on your personal side. A sweet spot is to have around $10,000 in limits, either on one credit card or a combination of the 2 to 3 credit cards that we have applied for previously. Okay. So once you hit that $10,000 threshold on your personal credit card, you're positioned for serious business funding. Now, this is where the comparable credit foundation actually makes a difference between getting approved for only $5,000 and the $50,000 limits. Now, the way for you to be able to increase these limits is on the credit cards that you have applied for before, you you would want to keep active usage and make on-time payments. Okay, you need to be using this credit card constantly, so use it like for 3 to 4 times every single month and pay it off. Keep your utilization under 10%, ideally between 1 and 5%. And then every 3 months, you need to be asking for a credit line increase, and make sure that you're updating always your income whenever they do request it. Another thing that you can do is that if you stick with me until the end of this video, I will give you a list of my favorite personal credit cards that will approve you for higher limits straight from the back. The next step is going to be maintaining your personal credit profile, right? So what we did, we added some credit builders at first. We applied for our first couple of credit cards. We requested to increase the limits on this credit card. And now what we need to do is maintain the credit score where it's at so that we can start building more relationship with these banks. So what you want to make sure of is that you are keeping your payment history on point. Never miss a due date, because this is 35% of your credit score. You want to keep your utilization low. A golden rule is to keep it under 30%, but the sweet spot is under 10%. And your age and mix of types of accounts is about 25% of your credit score. So that's why we want to have that installment loan, we want to have the rent reporting, and we want to have a couple of credit cards so that we can have a good mix of accounts while not opening too many right away, because it can lower our credit age. And then the increase at about 10% of our score, and that's why we want to apply only for max three personal credit cards, so that we don't have too many increase in the last couple of months. So these are the golden rules. Never miss a payment, keep your utilization under 10%, limit the increase to max 3 increase per bureau, keep always your oldest account open, and maintain a good mix of accounts. Okay, to protect your credit score, you want to know everything that is happening. So you want to monitor it. Download Credit Karma, sign up for a credit monitoring system, and make sure that you're staying up to date with everything that is happening inside of your credit profile. Now, the final piece for this to work is to start understanding the banking relationship, okay? We want to make sure that, because this is what is going to separate the pros from everybody else. Every bank has internal rating systems for customers. And this is not just the credit score, it's how they rate you as a customer based on your relationship with them. So you need to build what I call a true banking relationship. And this means open a business checking account, business saving, have consistent deposit and activity that shows that you're running a real business. Because here's the key, you need to let these relationships season. In 2026, banks are more strict. You can't just open an account and apply for credit the same day anymore. This is why the seasoning period is mandatory if you want a maximal approval. Okay, so these are the 5 things that you need to be taking care of in order to build a perfect credit profile to get approved for $50,000 to $100,000 in limits. Now, that's the complete personal credit to business credit blueprint. You need to start building first your foundation with credit builders. Acquire strategic personal credit cards, which I will give you in a second. Build a comparable credit to over $10,000 limit. Establish a banking relationship and maintain your credit profile up to par, to then being able to access the money that you're looking for. Now, since you made it this far, I want to share with you 2 of my favorite personal credit cards that will almost guarantee you a 10K limit, which are going to be the Chase Sapphire Reserve and the Capital One Venture X. And if you want another 3 options that you can apply for, where you can get approved for over $10,000 limit, and learn how you can review credit, build a funding game plan, and know which banks and data points to apply for every single state, then I would recommend you to checking out our Funders Academy. It's a community of funders just like you who want to learn more about business funding and potentially offer it as a service to others. It's only $99 a month, and the link is in the description. Until the next time.